The S&P 500 looking for its ninth straight day of gains. A higher close today would mark its longest winning streak since 2004. Earnings season is pushing on as investors eye key reports from major retailers like Walmart next week. Here to break it all down is Jay Woods of Freedom Capital. And Jay, really great to have you here. I want to go to the Wi-Fi Interactive where I'm showing the S&P 500 over the last 6 months. Now, we actually dipped down. I was interested to see that we actually went to the unchanged line after 6 months, but we are rocketing back up to these October highs. And meanwhile, the 10-year T-note yield has just dropped like a stone from the 5% mark to the 4.5% mark, facilitating these moves. What are you seeing in the technicals? And I'll go back to the S&P 500 here.
Yeah, we were under some pressure. We tested some key levels in a nice bull market rally, gave back about 10%. These are normal, healthy corrections. Had us a little jittery, but it was all driven by the 10-year, as you showed. And the 10-year spike got a little too far ahead of itself, and it's finally corrected. It hit that 5% threshold. It was like, okay, we got to get it there. We got it there. We're pulling back. Now we're watching 4.5%. There should be some support here at 4.5%. If it breaks down below there, then I think this rally can continue to have some legs. But given the speed of which we rallied off the low, how many days in a row is it now?
It was 8,
nine. Yeah, going back to 2004. I remember. That was actually the beginning of a nice little rally higher. Could that spell this is actually the beginning of the next leg of the bull market? We'll soon find out. But right now, given the recency of the rally and how strong it's been, going from oversold to overbought, a pause would be due. And I expect us to kind of digest these gains. And that's what's been impressive about this rally, is how we haven't really given back anything. And the buyers are still, the dominant force. And if we can hold and then break above 4,400, then the next 6 weeks should be strong into year end.
Yep, 4,400, the level everybody's watching. Want to move on to Apple here. This is a huge bellwether. It looks like we were kind of in a negative trend channel here as I'm going on the Wi-Fi Interactive. Might have broken through, depends on how you want to draw the lines. But what are you seeing in the most important stock in the solar system?
Yeah, and your lines were fine, Jared. With a finger, I was quite impressed. It was in an intermediate downturn trend, making a series of higher lows and lower lows, and we finally broke out of it. Just like the S&P, you can mimic the S&P 500. It's the same chart. Apple, the most important stock in the world, just like Microsoft, makes up a little over 7% of the S&P 500, and it's doing the heavy lifting that we needed to do. The earnings, they were a little mixed. The China reports had people a little skittish, but it's been able, the price action has been able to lead us higher and break out of that intermediate downturn trend. So what do I think it's going to do from here? I think it's going to make another run at 52-week highs. We see it in Microsoft at all-time highs. There's nothing right now to say Apple can't continue this run into year-end and close at 52-week highs. And if Apple and Microsoft are making 52-week highs, all-time highs, it doesn't get more bullish than that.
I want to move on to some earnings. We got Walmart and some other retailers. Walmart, by the way, as you noted to me, just coming off a record high. This is a 6-month chart. Let me just go to a 1 year. Consumer staple, perennials, staple in people's portfolios. Yeah. What do you think is going to happen next week?
Well, all-time highs are very bullish, and the fact that this is leading. Now, this is the one sector that you have a mishmash of stocks. In fact, Walmart, solid uptrend. Home Depot trying to reverse. It's kind of neutralized. Possible inverted head and shoulders pattern developing there. And then you have Target. Target's been the one that's been beaten down. Target, from a risk-reward setup, is actually looking good to me. It looks like we have a little floor in Target, and it's trying to reverse. And any positive news, kind of like a Disney today, two totally different animals, but price action is similar, and that's why I would compare the two. You may get to see a nice pop and a quick reversion to the mean, and given how much Target has been beaten down, I could see that rally.
Here's a 5-year. You can see that right here. I don't know what the percentage is, but it's palpable.
When in doubt, back it out. So you look at the 5-year. In Disney, you look at a 10-year chart, and you saw that 80 held. And what are we seeing? We're seeing a nice little mean reversion, nice good reaction to some positive news, and Target hasn't had too much of that. So that one of the three intrigues me the most. But Walmart, there are a lot of stocks on this new high list, and it's starting to expand, and you're seeing the cream of each sector. You see it in Hilton, in the leisure sector, making new highs when the others aren't. Cardinal Health, Eli Lilly, these are stocks. Look at that Cardinal Health. That's a beautiful little rounded bottom, nice breakout.
Here's a year to date. Wow.
Yeah, and it may have gone a little too far too fast over the near term, but these pullbacks would be very attractive to buy. And over the long term, this is the leadership within the sector. Now, will it carry the rest of the healthcare sector? That's the million-dollar question. I think going into year end, these stocks will lead us, and we'll see it in cybersecurity next week when Palo Alto, they come out with their earnings. They've traded higher the last 10 quarters after earnings. Let's see if they can make it 11.
Good start there.
Yeah, and you look at it. We're not at 52-week highs just yet, but Palo Alto can lead a lot of these cybersecurity names that have kind of been middling. The one that comes to mind would be, why am I blanking on you, Jared? Oh, Cloudflare. Net. If you have, look at Jared, you're the man with these charts. Yeah, Cloudflare is a stock that's been basing, and Cloudflare had good earnings themselves. But guess what the catalyst for that to break out is going to be? It's going to be Palo Alto. So if Palo Alto does well, look for stocks within the sector to make a breakout, and we could have a run to 75 very easy in Cloudflare. And then if you back it out, this stock could be breaking out of a longer-term pattern and has a lot to reverse. These are the setups I like. So the risk-reward setup for a Cloudflare, symbol NET, that's why I couldn't remember it because the symbol isn't the same. But we have some way to go. And then
we got to touch Bitcoin here. We got less than a minute. What do you think about this latest rally?
Well, clearly earnings came out and it broke out of a base.
Spot Bitcoin ETF, what more do you need?
Yeah, well, the spot Bitcoin ETF news is what's driving it. If it gets approved, I'd probably sell it because it's one of those buy the rumor, sell the news. But the only way I look at Bitcoin, our firm doesn't dabble in Bitcoin. It's nothing that we cover. But as a technician, the price is the only thing that pays in Bitcoin. And we had a breakout.
There's a lot of price history in here.
The price history is telling, and it has room to run. It just broke above 30,000. That was a line in the sand for a while, got right to 35,000, the next target. It pulled back, it consolidated, broke out, and it broke out in a nice way. 44,000, 45,000. The speed at which Bitcoin can move, not only is it a target for that level, it could get there quickly. I'm talking by the end of the year. That's a nice return, but like I said, with Bitcoin, have stops in place, be very careful trading it. It moves and it trades 24/7.
Lots of fake outs too, especially on the weekends. So
yeah, and who needs to be trading on the weekends? I know you Bitcoin traders will be there watching it, but I'm from this building here and we close on the weekends. I don't like to look at things, but make sure you have limit orders, stop orders in place because the moves can continue to happen to the upside and it looks good.
Jay, really appreciate you stopping by here. Jay Woods, Freedom Capital Markets Chief Global Strategist.